We got the job numbers today. We waited all week for this, and a lot of past reports earlier this week in relation to the labor market have really been weak. So, a lot of economists and market participants were expecting this report to come in weak. And let's see what was revealed. So, what we've seen is that in May, job growth slightly slowed due to the obvious reasons we cover every single day: tariffs. The US added 139,000 jobs in May versus the 130,000 that economists were expecting. So we got a beat of about 9,000 jobs. The unemployment rate didn't really move. We're still at 4.2%. And it's really been in this range for a while of 4 to 4.2% since May of 2023. And this 4.2% unemployment rate that we got is for the third consecutive month. That's not really the big deal. The big deal right here is the 7.2 million people unemployed that we got to highlight. This is the highest since 2017 if we completely take out the pandemic that occurred. Revisions showed that the job market was a bit weaker than many people hoped for earlier this year. So the numbers that we got earlier this year were revised down, and it showed that the job market was a bit weaker. We also seen that wage growth was 3.9% year over year for average hourly earnings, and that was a little bit higher than many people were expecting. What we also seen is that hospitals and leisure and hospitality accounted for about 80% of the new jobs created in May, so that's where the jobs are booming. Weaker industries consisted of retail, government, and white-collar professions, so those are where the weak job numbers were. Now, it's currently what some would describe a low hiring, low firing environment. Everybody's sitting tight, according to Brett Ryan, who is a senior U.S. economist at Deutsche Bank. This job report that we got was, good news. But what it does is dampen the hopes for the Fed to cut rates and supports them still waiting and sitting tight, which, remember, September is where we were really expecting to see the Fed cut rates for the first time. Now, this just means higher for longer regarding rates, and who knows if the tariffs disappear or not, but this isn't the popular scenario everybody was wanting. Now, of course, we got some commentary from the president today on this. Great job numbers, stock market up big. At the same time, billions pouring in from tariffs. But wait, there's more. If too late, and he calls too late Jerome Powell, the Fed chair of the Fed, if too late at the Fed would cut, we would greatly reduce interest rates, long and short, because there's longer term rates, there's shorter term rates. Usually people say the Fed controls the front end of the curve, but he's saying long and short. On debt that is coming due, Biden went mostly short term. There is virtually no inflation anymore, he goes on to say, but if it should come back, raise rate to counter. He's saying, all right, let's lower rates, and if inflation becomes an issue, raise it if that's y'all's concern. Very simple. He is costing our country a fortune. Borrowing costs should be much lower. Now, it doesn't stop there either. And wait, there's more. Too late at the Fed is a disaster. Europe has had 10 rate cuts. We have had none. Despite him, our country is doing great. Go for a full point rocket fuel. So he's calling for a full point that the Fed would cut. Where would that put us at? If the Fed cut rates by 1 full percent, that would put us at, is this June? Whoa. So at the June 18 meeting, this is my first time seeing this. So if we were to cut rates by 1 full percent, that would put us to 3.25 to 3.5%, that range that they do. Today's job employment report has increased the odds of a rate hike by 0.1%. I doubt it happens at all. I mean, 99.9%. At the June 18 meeting that they just leave rates the exact same. But this is interesting because I've been watching this every single day. I look at it and it's usually super high in the 90% range for keeping rates the same at this 4.25 to 4.5. and then there was a very slightly small chance of them cutting rates by 0.25%. And now that's completely disappeared, and now a hike is on the table. And this is interesting. Now, we got to remember what we're watching is for the Fed to cut rates for the first time in September 17th's meeting. And what are these numbers revealing? 51.2% that they cut by 0.25%, so that's still in line. I wonder about July 30th. 83. All right. So all that's still in line. Now let's go back to the topic. So as the Fed warned, it's inflation they're worried about, not necessarily employment. And with these wages that we've seen in this employment situation, with them being a bit higher than we expected them to be, what does that mean? Well, for one, that means that wages are growing more. On top of that, there's still tariff uncertainty. Where are these negotiations going to go? And it's turning the eyes of market participants to inflation, which is exactly what the Fed is saying they're worried about. They don't care about these jobs. They care about inflation, and that's what they've been fighting for a while. And the uncertainty is still here. Now, after this job report, what we've seen is that bonds sold off, and when bond prices go down, yields go up. So just really quickly together, let's look at the 10-year Treasury yield and see where we ended off on the day. So yeah, we're right back at 4.5% on the 10-year Treasury, assuming this is where my computer loads at. It just takes its time these days. Maybe if y'all support the channel, I could get me a better setup and we could continue going into all of this. Here's my pitch. We could continue exploring everything going on together just with better tech. Now, bonds sold off on the strong employment data, just suggesting that the inflation expectations remain elevated and may even be sticky beyond just those summer months. Many economists in the past thought we'd see the surge. So now everybody's on board, on the boat, expecting the surge for summer inflation to kind of spike up a little bit. But Fed officials are more so worried that, hey, we said summer, but it might last a little bit longer. And this is right as Larry Fink also said that he expects inflation to come in. So, and that's the CEO of BlackRock. So there's all of this noise going on. Hey, we could see inflation become a problem again. And when inflation expectations are higher, people don't want bonds that are guaranteeing this rate, let's say 4.5% for 10 years. That's cool, but why would I want that when I expect inflation to be kind of high, elevated, and especially with these wages being high, people's going to be able to buy more, demand's going to be higher, supply is going to be the same or less because companies are just sitting on inventory. That could cause more inflation. So I'm better off just going to buy some stocks or some different assets other than these safe bonds. Now, the Treasury, speaking of these bonds, the Treasury released its semi-annual report. And something I want to note is that they're demanding the Bank of Japan to jack up interest rates in their latest semi-annual report. So I already kind of vetted through this. They've mentioned China in that one. China with currency manipulation, and they're calling for them to stop. I didn't go too much into the weeds of that one. I'm looking at this Bank of Japan policy where they say the Bank of Japan policy tightening, they're calling for them to tighten and hike rates, should continue to proceed in response to domestic economic fundamentals, including growth and inflation, supporting a normalization of the yen's weakness against the US dollar and a much needed structural rebalancing of bilateral trade. Treasury also stresses that government investment vehicles such as large public pension funds should invest abroad for risk-adjusted returns and diversification purposes and not to target the exchange rate for competitive purposes. I just think this is interesting because when the rates are increased or high for longer in Bank of Japan, that goes back to that Japanese carry trade that we've seen. And remember, if you haven't looked this up, the Japanese bank and Japan inflation really plays a huge role into the entire macro landscape. And the Japanese carry trade, let's just say there's a lot of dominoes that have fallen because of that Japanese carry trade. And if we see that continue, more dominoes fall. And what's known about Japan is that they have low inflation for quite a long while, which has had allowed them to keep um, interest rates artificially low that Trump describes it as. And remember, they play a huge role in the financial system because of that. People being able to swap their money for the yen in the foreign exchange markets, borrow money at extremely low rates, and then bring it to other countries, let's say the US, where the yield's a little bit better, and buy up a ton of treasuries with cheaply borrowed money. So whenever the rates are increased, that kind of messes up the spread and people's willingness to even take on that risk in the first place. A lot of money gets taken out of creation when the rates get hiked because people pay off their loans and sell their US treasuries. It's a mess. And the US Treasury is calling for them to increase interest rates. So that was interesting. But we got some news today from Trump. I am pleased to announce the Secretary of Treasury, Scott Bessent, Secretary of Commerce, Howard Lutnick, and United States Trade Representative Ambassador Jameson Greer will be meeting in London on Monday, June 9th, 2025, with representatives of China with reference to the trade deal. The meeting should go very well. Thank you for your attention to this matter. How do we really think it's going to go? It seems like Trump's back's kind of against the wall right now. The international courts are saying his tariffs are illegal, so I'd imagine that's top of China's mind. I'm sure they're still going to try to negotiate as far as the US side of things. The rare earth minerals that they have been really talking about, it seems like that's going pretty smooth. But, and I believe I seen an article earlier that the court blocked Trump's ban on student visas over there at Harvard. I don't know if, I didn't see any more news articles about that, whether or not that's true or not. But I'd imagine China doesn't forget about this. And then the restriction on AI chips and all of that regarding that mess with China, I'd imagine there's still a bumpy road ahead. And although it's looking very nice right now, I'd imagine uncertainty isn't decreasing. I'd imagine it's still increasing. But what else is increasing? Well, the happy stock market. Today was pretty good. Across the board, we got green. Even in the after hours, we're still green. Gold kind of selling down. Maybe people feeling more optimistic about how things are going in the markets. And we've been looking at this every single day. What have we been talking about? Well, it seems like the new all-time high for stocks is possibly coming soon. Who knows for sure? Like, I don't know for sure, but if I was just to guess, maybe a new all-time high for stocks coming soon. We also see the VIX back down low. And the stock market's really happy today from the Trump announcement regarding China's meeting with the US in London. So that's good. I wonder why they're not meeting in China or meeting in the US. I guess London's a good counterparty. Maybe there's just a big detail I'm missing here, but I'd imagine if it was going really well, they'd be meeting in one of the two's home countries. But again, who knows? I don't. The good job numbers were good. And then on top of that, we didn't get more Trump drama today. Like, it was pretty quiet, pretty good, other than him shouting out Mr. Too Late. But what we've seen is the S&P 500 passed 6,000 and closed above 6,000, and the market is on pace for the best start of a month this year. So are we expecting new all-time highs pretty soon? We're not too far away from it, to be honest. But there are reports that the second half of the year is looking a little bumpy, as well as these trade negotiations, because what does the second half of the year reveal for us? Well, interest rates are still high. That's why Trump's calling on Jerome Powell to cut rates in the Fed. Tariffs are still uncertain as far as how these negotiations are going to go, and it takes a while for tariffs to kick in. So the tariffs that were banned and then temporarily put back in place are expected to start kicking in later on this year. So that whipsaw effect from the tariffs and how they affect things as far as inflation and the Fed watching inflation rather than the labor market. And then the economic slowdown that people's been predicting all of this year so far and pretty much all of last year for later on this year. So hiring could slow down, imports, exports, and all of that plays into GDP and consumer sentiment, how people feel, and even business sentiment, how people feel about the economy. We also got some earnings report from Lululemon today and DocuSign. Lululemon revealed that, for one, it's lowering. Oh, look at that just drop here. Let's see if we could just put this on the one chart today, and let's go to the 15-minute chart. Yeah, look at that. It just jumped off of a cliff and it is going swimming. And then we got that little, what they call a dead cat bounce. So when you drop something and it like kind of bounces before it continues going down and consolidates, so to say. They mentioned that they're lowering their earnings forecasts. They also mentioned that consumers are being cautious and very intentional with their purchases. So I just thought that that choice of language was interesting. To offset tariffs, they'll be moving production to lower tariff countries and announced modest increases on prices on a small share of products. I'd imagine it's not going to be very cheap to just up and move your production, and that will result in these increases in prices on some of their products they sell. But at least they're trying, right? They're not just going to bury their head in the sand and, well, tariffs are way higher, we got to raise prices. They're at least trying to present the image, the impression that they're trying to do something about it. We also seen that, one, they scheduled a call today to talk, Trump and Elon Musk. And then we're going to end the video out today. I hope this video is valuable to you, but stick around with me if you even care. Elon and Trump were supposed to hop on a call today. They ended up deciding not to. And I think this was a good ploy for Trump, because what he said is, hey man, I'm not worried about Elon and his mess and his drama he got going on. I got better things to worry about. The White House's focus is domestic and foreign policy, not on Elon Musk. And I was just thinking about like all of the mess that's been going on between literally Trump versus the planet. And it seems that with the taco trade mess going on, and this is more so, let's just say, a theory of mine. So with the taco trade, Trump always chickens out, and everybody started believing that and pressing him, and it's been all in the media. It kind of makes Trump seem like not about it. So it was kind of up to Trump to really up the heat and up the smoke with everybody. It's smoke with everybody. And like, I'm so crazy. I'm gonna like, and Elon played he's been the one talking about the big beautiful spending bill and everything. But thinking about it, Trump's literally fighting everybody. It doesn't matter who it is. He's kind of being respectful these days. Not so much like he was, as he's not using the disrespect he was using before being president. You know, he's facing China respectfully and Putin respectfully and even Elon respectfully. And I mean, he is bashing Jerome Powell and Biden and blaming the game and banning people from schools and trade tariffs here and trade tariffs there and this and that and all of this to try to make America great again. But then the taco trade emerged, and then the court ruling saying is banning banning his tariffs, saying they're illegal and all of that. It's almost as if Trump has to do something to kind of show how serious and crazy he is for his art of the deal, that he's willing to spend in oblivion, send his own country into a recession. Like, that's how crazy this guy is kind of the front he's putting on to these other countries. And that, in a sense, maybe could reinforce some of that credibility he has and how far he's willing to go to do what he believes is right for his country. That, man, this man's so willing to, like, he's so set on whatever his agenda is that he's willing to send the very country he's president of into a deep, dirty recession. I mean, you could blame it on the Fed if you want. And like, it's like, and he's a crypto-friendly president. It's like, man, I'll burn this mother effer down, and I'll just buy Bitcoin if I have to. Forget the US dollar. I'll do whatever I need to do. And I could be missing out on some spots, but I made a note yesterday, and let me pull it up real quick. Let me just read this to you. So what the note said was pretty much it was my epiphany, my light bulb moment I had at the gym, and I sent this to my brother, and pretty much where it ended off. So here's his leverage against other countries is that it can be his very downfall, and that's what makes him so strong in this current negotiation. He's down to up the smoke with any and everyone, and that shows how crazy he is to these other countries. He's so crazy, he's willing to send his own country into a recession to get his way. He'll spin, and raise the national deficit and devalue the dollar, raise these treasury yields, increase borrowing costs for everybody, and that the American consumer is the consumer of the world and is where most of the spending comes from. And it's like, man, I'll just buy Bitcoin if I have to. Forget it. Like if y'all don't want to play fair, forget it. Let's burn it down. So it's really showing, despite the mess that it's causing, and showing how crazy it really be. And you kind of have to after this taco trade. And then I went on thinking about it. Like in the 1990s, I wasn't around, but Paul Volcker, the Fed chair of the U.S. Central Bank at that time, had to do what he had to do to prove his credibility and the Federal Reserve's credibility, even if it meant sending the country into a recession to bring down inflation. Right now, in 2025, Donald Trump, president of the United States, is not necessarily the Federal Reserve this time. The past doesn't repeat itself, but it rhymes, is how the saying goes. He has to do what he has to do to prove his and his country's credibility. So I'll leave everybody with that. We got a little hypothetical and opinionated here at the end, but that's kind of what I was thinking and I wanted to share it. But that's what we got this week. Just real quick, let's see what we got for next week. So next week, I'm pulling up the economic calendar. We're just stuck loading real quick, really quick. So on the 9th, we got wholesale inventories. I don't even know what NFIB optimism stands for. I'd imagine it's some type of business index. Let's see real quick. Because the whole point of being here is to learn. So the NFIB, so small business index. So that one's good. Small businesses are where most of the jobs are created. Wednesday, we got consumer price index. So we got CPI on June 11th. So mark your calendar for Wednesday next week. Thursday, we got initial jobless claims, and I heard this idea and I thought it was interesting that on a weekly basis, jobless claims don't matter just because it's kind of noise in the background. I don't remember the idea he was going at with it as to why, but longer term jobless claims will be an issue as AI starts taking away on the job market. And because we're already seeing employers hire less, they're not firing a whole ton of people necessarily. They're just kind of working with what they got. And as more people get skilled using AI, it'll be a scenario where they could do more work with less people, which could weigh on jobless claims in the long term. We also got PPI coming up and then consumer sentiment for Friday. So that's what we got this week. Well, next week. I hope everybody has a great weekend. Just under 24 minutes on this video. Hope your weekend's a blast, and I'll see you next time. Y'all have a blast. Y'all have a good one.